Alrighty, welcome to another free lecture. So what this is going to pretty much be about is a candlestick. So I'm going to write this down as candlestick. And now you have two different type of candlesticks. You have a bullish, which pretty much means green slash up. Then you have a bearish, followed by a red slash down. Okay, so bullish just means going up. Bearish just means going down. Okay, that's all it is. Now, what does that candle consist of and what does it look like? So on a candlestick, over here, we'll just mark it out over here. I'll draw a bullish one. So for a bullish candle, I'm going to mark out the body. And then I'm going to mark out the wicks. Now, a wick is where price action has gone. So you'll have this body form. Now, let's say we have this body here. We put in that low. We're playing price action within this body. It's kind of moving like this a little bit. Okay, so it's moving. Now, eventually, let's say it starts to go down. Price action has to leave that timestamp in point. So pretty much what that means is if this body right here went all the way up here, but then came all the way down here, it would have left a wick. Okay, so for a bullish candle, we have right here, we have the open, which is at the bottom. Okay, so for a bullish candle, all it consists of right here is, let's just say, open. Okay, low. Okay, price action playing within that candle, sets in a high, and then closes here. All right, so for a bullish candle, all it consists of is the open at the body, or at the bottom part right here, sets in a low, sets in a high, and then closes right here. That's how a bullish candle forms. It has to set in a low, a high, okay? So a low, so opens, low, high, close. Bearish candle example would be something like this. So we open up right here. I want to make this red. So we open up right here. Okay? So price opens up. Price sets in a high. Sets in a low. And then closes. Okay? So I'm going to mark this out right here as your open. Bro, can I please type? Thank you. Open, close. Okay. Remember, that's your high. That's your low. Okay, so you have open, low, high, close. Open. Oh, I'm sorry, open. This will be your close. That's where price action closed. So close. Got your low. Then you've got your high. Okay, the high and the low never changes. And what do I mean by that? I mean that the top portion of a candle will always be the high. The low portion will always be the low. Okay, the open and the close is different for a bullish and bearish candle. A bearish candle always opens up here, always sets in a high, always sets in a low, and then always closes there. A bullish candle always opens here, sets in a low, sets in a high, and then sets in a close. That's what that is. So you have bullish, bearish. Now, so if we were, let's say, jump to a higher time frame. Let's say this is a 4-hour candle. Okay, so you have these 4-hour candles. 4-hour candles right here. Now, within this 4-hour candle, let's say you were to drop down to a 1 minute, this entire candle here has price action like this. And then closes right there. Okay? So this 4-hour candle, let's say this is all 1 minute price action. 1 minute price action, PA. This blue squiggly lines is the 1 minute chart within this 1 4-hour candle. Okay, I hope this makes sense. So the 1 minute right here, so we have the open, we set in the low, that's what it looks like on the 4-hour. Then we set in our high, okay, right there. And then we set in our close, right there. Perfect. There's a perfect example of what a 4-hour candle looks like. What does that look like for a bearish example? All right, I can't move more to the right, so I got to draw this out like this. So we have our open, okay. We set in our high, we set in our low, and then we close right here. Close, set in our low, set in our high. That's exactly where we open. That's all it is. Now that you have a pretty good understanding of what a candle is and how it functions, your trading will be a little bit easier, because I'm sure you were looking at a candle thinking, what is this? What is this? So that's all it is. So this could be a 1-hour candle. This could be a 15-minute, a 5-minute, 1 minute, 15-second, whatever. There's always going to be price action within that candle. So when price opens up, okay, so let's say this is 10 a.m. This could be 10 a.m. right here. So you have 10 a.m., which is the start of the new 4-hour candle for the New York AM session. So 10 a.m. opens up, comes down lower, okay? We set in the low. We could have manipulated a low that was, let's say, down here. All right, so we set in that low. Okay, let's say it's around like, I don't know, 10:05, whatever, 10:20, 10:30, or it'd probably be like 10, something like that. So we set in our low, we come back higher, we set in our high, then we set in our close. Now, this is interesting. Where is the wick for this price action? Now, this little price action right here is this wick. Okay? It's the wick. Same thing here. This price action right here is the wick. Up until it closes right here. So this price action is the wick right here, and so is this price action right here. That's the wick. Phone is blowing up. All right. So I hope you guys have a pretty good understanding of what a candle is now. It's pretty simple to understand. Just know a bullish candle opens at the bottom, sets in the low, sets in the high, and then closes bullish. It closes on the upside. A bearish candle opens up at the top, sets in a high, sets in a low, closes at the bottom. Bearish, low, red. Okay? There you go. Now you understand what a candle is. There's some sauce on a candle. All right. Remember, bullish is high, bearish is low. Bullish is green, bearish is red. All right. Hope you guys enjoyed. Peace out.